The age-old question is back. Should you contribute extra onto your mortgage payment? Maybe make an extra payment each year. I've got 3 reasons why you might want to consider it. I've got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Yeah, mortgage rates have been coming down at the time I'm recording this video, but they're still near 7%. I've been seeing the headlines. Mortgage rates are down again. Yeah, they're down just a little bit. So they're still near 7 based on how the concerns about the economy are going right now. I would expect those rates to actually start coming down officially here, but they've been over 5% for a few years. And so if you've got a mortgage at one of those higher interest rates, 6, maybe pushing 7%, the question's now back on the table. We haven't had to digest this question for a long time, and that is, should you be making an extra payment to your mortgage every single year? Or said differently, should you pay extra onto your mortgage every single year? Now the question actually is, instead of what, right? And so typically for financial planners like myself or other folks out there, they compare and contrast, should you contribute extra towards your mortgage or invest those dollars? Listen, even a mortgage rate at 7% long term, the market is going to be a better mathematical return, right? And so in the short term, all bets are off. No one knows. The short term of the market, it's a leaf blowing in a hurricane. You have no idea exactly where it's going to go, and we're certainly seeing that right now at the time I'm recording this. But long-term averages over 10 years, over 20 years, over 30 years, the market average is around 10%. If your mortgage is around 7%, and for some of you, you get a deduction on that mortgage interest, the math is going to suggest that, listen, you need to be investing. I was talking to a young planner on our team, and by young, I mean right out of college, about this recently, and he said, hey, listen, the mortgage is near 7%. I'm putting a little extra on it. Should I be paying extra on the mortgage or should I be saving? And this is why you need a certified financial planner who understands all 6 areas of your financial life as well as you do, if not better, how they intersect, how they work together, and then can give you advice with that context. I told him, you have to do both. You have to do both. You have to find a way to both contribute extra or pay extra onto your mortgage to pay that rate down, to build up equity, the 3 benefits I'll share here in just a second. But you also have to be saving up for your future, because when you're 24 years old, the savings that you have for your retirement, those are the hardest working dollars that you're going to have your entire life. You're going to, as you move throughout your career, you're going to wish, oh, if only I could go back to when I was 24 and just invest as much money as possible. And yet at the same time, it's more than just math, and you've got to be paying down on that mortgage a little bit extra as well. So you've got to do both. That's not blanket advice for everyone. You've got to work with your CFP to see what's appropriate for you. But with rates high and with the condition of the housing market, this question's back. And there's 3 reasons why it may make sense for you. There's benefits to paying 1 extra mortgage payment onto your mortgage every single year. Saw this headline, an article recently, which is part of what inspired the topic, as well as that discussion I had with one of our younger planners. And this article, normally when I see them, they're close or they're just way off, and I talk about it because, hey, this is not good information. This article's good, and I've got it linked below, and it shares 3 reasons why, the 3 real benefits for making an extra mortgage payment onto your mortgage every single year, and it's solid. And the first one is that paying extra on your mortgage early will really take years off of the mortgage. That was the discussion I was having with this young planner. So take a look at this math here. If you have a $300,000 mortgage, 30-year loan at a rate of 6 3/4, monthly payment, this doesn't include escrow, by the way, monthly payment just shy of $2,000. If you do 13 payments of that $2,000 instead of 12 payments, you will shave 6 years off of your term. 6 years off of your term. Doing the math there, that's incredible. That is tremendous. Yes, you're making an extra payment, but it is reducing years off of your loan. And so fantastic, right? That I would want to have that up my sleeve, as well as save as much as I possibly can towards my long-term savings goal. So I would, if I'm 24 or if I've got one of these a higher interest mortgage, I would find a way. I'd tighten the belt. I'd make an adjustment. I'd make a trade-off somewhere else in my life where I can do both of those things to shave off those years off my mortgage while also saving up into my retirement accounts. And of course, the second reason why you'd want to make an extra mortgage payment a year is to save on interest, right? That aligns right with the first one. Yes, the first one, you're taking 6 years off of needing to make a monthly payment of principal and interest, but part of that is you're saving a tremendous amount of interest. Take a look here at that same math. Same details as above. You're going to pay over $400,000 in interest over the life of the loan. That's breathtaking. However, by making the one extra mortgage payment, so 13 payments every year instead of 12, you're going to save almost $100,000 in interest alone. Again, you do the math and you compare that to at least historically what the market's done, and you would say, I'd rather have the market. I'm going to say do both. I'm going to say find a way to do both. And then the third reason, the case to make an extra mortgage payment each year goes beyond math. And that's why, you've got to consider a lot more and working with your CFP, but you build equity more quickly. And right now, with housing affordability so strained, if I'm a young individual and I'm buying my first home or maybe my second home, it's likely not going to be my forever home. It's likely, again, with affordability, it may not be in the school district that you want. It may not be with enough bedrooms or the right features that as you're building a family or whatnot. This young individual I was speaking to, no family yet. And so at some point, we'll be moving. And therefore, paying a little bit extra allowed you to build more equity. And I know you might say, naysayers would say, well, that just means, you could spend even more for the next house. Well, what if you're responsible with it and you're paying down the mortgage so you've got more equity, and that allows you to get 20% down on the next home so you avoid PMI, those sorts of things. So I saw early on, so I started as a financial planner over 20 years ago, and mortgage rates were in the 6% range or so. And between myself and some folks very similar ages, I got to see a difference between paying a little bit extra on the mortgage and building up that equity and what that meant for the next move versus those who were just barely scraping by, didn't pay any extra, and then when they went to move were handcuffed and needed to get a non-conventional loan or other things, and it created more tension in their finances. So third reason not to be overlooked, and you can't really apply math towards it, making an extra mortgage payment every year helps you build more equity quickly. And if you're young, that equity is important because it gives you more flexibility in the future. So those are the three main reasons. Now, again, you've got to work with your certified financial planner to see, okay, does this make sense? I would argue, find a way to make an extra mortgage payment or pay a little bit extra on your mortgage without having it crowd out any of your other financial priorities. And for me, this was, okay, wait a second. Can I find a way to cut somewhere else? I'm already saving what I think I should save or what I want to save towards my retirement. Can I find a way to cut something else out to make an extra mortgage payment or to pay extra on the mortgage? Work with your certified financial planner. See if that makes sense to you or what recipe makes sense for you. And if you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.